Did you get an EIDL or an EIDL or an economic injury disaster loan? Well, they're all the same thing. And today we're going to talk about the EIDL loan, whatever you want to call it. I like to call it the EIDL. Today we're going to talk about this loan because people are starting to get statements in the mail and they're asking questions like, when am I going to start repaying this loan? And what I wanted to do is just go over a couple of the basics of the loan with you, and then I have an amortization schedule. And if you don't know what an amortization schedule is, I will explain it to you. It is basically a schedule that shows by month how much of your payment is going to interest and how much is going to principal, which is the actual original amount of the loan, okay? So we're gonna jump into an amortization schedule that I have created for you. So if this sounds interesting, please stay tuned, and then also just take a second and like this video and subscribe below if you aren't already. It helps me out so much and it helps me keep bringing this content to you, and I just love to help you guys out, and I don't know, it encourages me when I see those likes and I see the subscriptions go up. So I would really appreciate it. So today we're going to talk about the amortization schedule of an EIDL loan. So far, I haven't seen one. I got an EIDL loan or an EIDL loan, and I haven't seen an amortization schedule for me. So when I saw the loan document come in, I said, I wonder if I can create one for myself. So I went ahead and created one in Excel, and we're going to walk through my example in just a few minutes. But I wanted to let you know that I have made this document available to you to download for free. So in the description below, there is a link to my website where you can go and you can download this amortization schedule, and it gives you some pointers on how to put in your own numbers so you can figure out this for yourself. Amortization schedules are really helpful if you're trying to figure out how much interest you're going to pay over the life of the loan, or how much interest you are accruing. Like, let's say in this year right now, since the interest started from the moment you got the money, it's accruing this year even though you're not paying any payments on it. Remember that payments were deferred for a year. So the fact that payments are deferred doesn't mean that interest is deferred. So what I wanted to know is, well, how much interest exactly? I can do a rough calculation, but a rough calculation is not necessarily factoring in the interest that's also accruing over the life of the loan or over the term. So if you remember, EIDL loans are 30-year loans. That's a really long time for a business loan, you guys. And I mean, this is essentially a mortgage, okay? And then the interest rates are pretty low at 3.75%. I believe for nonprofits, it's 2.75%, okay? So what I've done is I've typed in those numbers and I've created a schedule for you guys, and we're gonna walk through what that means. And I wanna show you what it looks like if we were taking the full 30 years to pay off this loan. I really don't want anybody to be taking 30 years to pay off this loan, okay? It just really doesn't make any sense. And let's also be honest, do you think you're gonna run the business that you're running right now? Do you think it's gonna be the same business in 30 years? Do you think you're still gonna have it? Most small businesses are not in business for 30 years. We're entrepreneurs. We typically, even if we could run the business for 30 years, a lot of us want to shut things down and start something new in a few years. So let's be honest with ourselves too. This is not a loan that needs to stay on our balance sheets for forever and ever, okay? So what I want to show you is I'm going to show you this amortization schedule, and then I also have added a prepayment column, which I'm going to show you. So if you want to start paying off the loan early, we're going to show you what the effects of that will be, okay? Well, let's just go ahead and hop into the Excel. All right, let's go. All right, so this is the amortization schedule that I have created for you guys, and I want to walk through it real quick. The big thing with amortization schedules is basically any loan that you ever get should have one of these associated to it, because this is how it helps the bank know what to charge and how much to put to the principal amount of the loan, which is the amount that you were originally given. And then it also helps them figure out exactly how much interest to charge you based on the interest rate of the loan, and you signed documents for that loan, right? That had a specified interest rate. And so any loan that you have has some of these key elements, these key terms. You have a principal amount, you have a year or a number of months that the loan will be spread over, you have an interest rate, and then you'll have a basically a start date of the loan. Now, the EIDL is kind of interesting because they have deferred the payments for the first year, right? So we have in this schedule, I have a payment start date and then an interest start date. And the interest start date is basically when I got the loan, or at least the beginning of the month that I got the loan. And then this statement payment amount. So what they have done is they have specified how much I need to pay after the payment start date triggers, okay? And I've starred these things that can be found directly from the EIDL statement. So I'm gonna show you that right now. All right, so here we are in the EIDL statement. So I've edited out kind of the sensitive information, but here is that payment due date that we were talking about, 6/1/21, and then the installment amount and the principal balance. Okay. And once you start making payments, they're going to be sending these documents, and then it'll show the date of the last payment, amount of the last payment, and the amount of the payment that went to principal, and then the amount that went to interest. Because anytime you make a payment, so when I pay that $98, part of it is going to go to paying off the interest, and then part of it's going to go to paying off the principal. And the way that the EIDL loan works is that it's going to go and pay off interest first, and then any remainder will go to principal, okay? So I just wanted you guys to know that that's kind of how the loan is working. And this document does have information on the back. I suggest you flip it over when you get it and read through the fine details, okay? All right, so the way that this schedule is set up is that the period, the term, each month is run down the length of this schedule. So we're going to go all the way down to 360, okay? So my loan will be fully paid for and all done in May of 2050. If I were to just pay the payment as is, but there is no way I am going to wait that long to pay off this loan. Just no way that's going to happen. So, and I'm going to show you part of the reason why. We already talked about the 30-year term and how that's a very long term for a business loan, right? But I also want to show you that the total amount of interest I would be paying over the life of this loan over 30 years is $14,096. Okay, so this is a lot of money to be paying on a $20,000 loan, and it's just ridiculous. There's just no way I would take that much time to pay off this loan. But I did want to show that to you guys. So if you got a large loan, let's say you got $100,000 or $200,000, maybe even if you got more than that towards the very beginning, some people were loaned out a lot more than that. This interest amount can get pretty significant. Okay, so I want to make sure that you are very clear there on how much interest you could potentially be paying. Okay, and what I've also done here for you guys is I've grouped these rows together for you so that you can make it a little simpler and not have to scroll quite so much. I've grouped it based on year, and then I've summed the interest based on the year. Okay, so you can see that all nice and clearly. And this is just an estimated amount of interest every year. Guys, I didn't want to make this super perfect. It's going to be down to the cent, pretty much spot on, but we are going to have to wait and see what the SBA is charging or what really they're using, because they might have had a different start date, like the actual day that the interest started accruing. And then that's going to throw off my whole calculation, because this is they are charging the interest on a daily rate, okay? So 1 little cent at the very beginning, if I'm not on just right, could throw off the whole schedule. But the point here is that this is a very, very good estimate of what your interest will be, okay? So just use this as a guide, use it as an estimate. Don't come back to me and say, Hannah, this is not exact science and the pennies are not quite right, because I'm telling you, they're not going to be quite right. Okay. So I'm just going to go ahead and just change one of these numbers just to show you what this would look like. And let's say you got a $40,000 loan. So this number is, or day one here, oops. Day one here is reading off of this cell. So it's going to be pulling that $40,000. And so this is what your interest would look like if you got a $40,000 loan. Okay. So I'm just kind of showing you, giving you an example. Obviously, if you got a $40,000 loan, the SBA would give you a different payment amount. All right. So keep that in mind. But I am going to go back to my 20,000. And then remember that I said that I'm not going to take 30 years to pay off this loan. So I put in a prepayment column here. So let's say at the beginning of, let's say at 2021, I was like, you know, I have 10,000 of this loan that I didn't use. Okay. And I want to go ahead and pay 10,000 off. And I'm going to hold on to the other 10,000 because I might still need it for a couple of things. I'm still trying to get my feet back underneath me after coronavirus and everything that it did to businesses. Let's just say I want to prepay $10,000. And then the next year I'm going to pay another $5,000 back because business is picking up. And then at the end of year 3, I'm like, you know what? I just want to take care of the rest of this loan. And then you could potentially, I'm just going to show that amount there. Okay, so once I pay off the balance, then I am good to go. Okay, I probably overpaid it slightly here, but this shows you that you could pay this off pretty quickly. So if you want to get into a payment and then you can expand this. So let's say instead of doing it like I did where I did annual chunks, let's just say you want to pay an extra $1,000. So pay off an extra $1,000 until the loan is done. So if that's the case, then I would be done in about, let's see, I would have paid an extra 20. I would have basically paid back my principal of my 20,000. So I would be done in 12/22. All right, so this is totally flexible for you guys. You guys can go in here, put in numbers, play around with it, do what you need to do to make sense and what makes sense for your business, all right? So keep in mind that you need to get the principal amount, the principal start date, and then the EIDL statement payment amount. Make sure you get those all from your statement. And then make sure that you have the starting month correct. And now the way that this Excel is working is you might have to adjust these months. So you might have to adjust the month that you got the money and then drag down. But you are going to want to make sure that it fills months rather than days. All right. So just keep that in mind. That's a little Excel tip. Now, if you really don't know how to use Excel, you can go in and type in like each one of these months. But this is a very good Excel tool tip to learn. Okay. All right, well, that is the amortization schedule. Remember that this is available on my website for you to download, and it's my free gift to you. I really hope that this is helpful to you. What I want you guys to do is make smart financial decisions for your business and pay off this loan in a timely manner that does not hurt your cash flow too much, but also helps prevent you from paying unnecessary interest over time. All right, so if you have any questions about this, please do put them in the comments below. Like this video if it was helpful, and please also share this video with anybody else, any other small business owner that you know that got an EIDL loan. All right, thanks so much. Bye.